A very good afternoon. Let's take a look at the markets now. Asian stocks were trading lower today following losses registered on Wall Street as tariff concerns continue to weigh on investor sentiment. The Hang Seng Index falling by nearly 2% on the day. Investors will also have been digesting the latest growth figure out of China, whose GDP rose by 5.4% in the first quarter, ahead of market expectations. The Nikkei share average declined by 1.01%. The Hang Seng Index fell by 1.91%, while the Shanghai Composite Index gained 0.26%. US markets were said to be volatile in yesterday's session as investors digested a new round of corporate earnings and remained concerned about changeable US tariff policies. While markets have rebounded somewhat, all three of the major indexes remain below their early April 2025 trading levels. The Dow Jones Industrial Average closed down 0.4%. The S&P 500 fell by 0.17%, while the Nasdaq Composite Index ended flattish, down 0.05%. In terms of our local indicators, we see that the All-Share Index is just under 1% firmer, trading at 90,385 index points. The rand is trading at 18.88 against the US dollar, 21.47 against the euro, and 25.06 vis-a-vis the pound. It has strengthened slightly against the US dollar as it had breached 19 against the dollar earlier in the trading day. Gold is trading at $3,308 an ounce, platinum at $962 an ounce, while Brent crude oil is at $65.33 a barrel. All right, let's get into the conversation with Trevor Garvin. He's the head of multi-management at Ned Group Investments. Thank you very much, Trevor, for joining us. So what's your overall view of what's happening on local and global markets? I think, of course, volatility still remains the order of the day.
Yes, totally, and great to be with you today. But yeah, volatility absolutely spiked last week, and we saw the volatility or VIX index hitting a peak not seen since COVID in 2020 of around 58 points or so, and it's dropped down to the low 30s at the moment, which is closer to the long-term average of around 20 or so. So definitely volatility was extremely high. It's calmed the last couple of days or so, but we still see a large degree of anxiety and uncertainty in the markets, and largely, as you mentioned, around President Trump and the ongoing tariffs that he is implementing or proposing to implement, and the uncertainty of where that actually will land up in the next 3 months or so.
Yeah, so China came out with a nice GDP print for the first quarter, 5.4%, which is beyond market expectations. The market was expecting something like 5.1%, but no doubt this is going to be short-lived, right?
Correct. So China's really interesting, and as you said, a better GDP figure than forecast. Markets are still uncertain about China. They, as we know, have had huge pressure in the property sector of the market. That's put many property owners under pressure. So really, I think the Chinese government is now going to be under pressure to use the various stimulatory measures that they have to probably pump money into the economy to, one, still get the property slump out of the struggles that it's been, but equally to counteract the tariffs that have now been put in place by President Trump. And the tariffs are really sky high. I mean, the US has 145% tariffs now on Chinese goods, and China likewise has implemented 125% tariff on the goods that they're importing from America. So we have this tariff war currently between these two countries, and certainly China is worried that this will have a negative impact on their GDP growth going forward.
Yeah, we covered the monetary policy review last night, and the Reserve Bank Governor Lesitja Kganyago was talking about the real concern about the trade war that's taking place between the United States and America, basically saying that higher inflation looks likely and the pathway in terms of interest rates for central banks looks very uncertain. What do you read in that message?
Yes, I think that's correct. And really, the outcome of tariffs at the end of the day, no matter which way you look at it, is it's going to increase inflation. Prices are going to go up, which we know is inflationary. And what are the side knock-on effects from that? Is higher inflation generally leads to higher interest rates from the central banks needing to curb that inflation. Equally, though, you have on the other side, higher prices leads to slower economic growth. And likewise there, central banks would normally lower interest rates to try and stimulate the economy. So I think the central banks at the moment are in a really tough position because they're having to balance the potential need to increase interest rates to keep inflation under control, but also lower interest rates to stave off the slowing global economy. And it's going to be interesting to see which route the central banks take. At the moment, the markets are actually pricing in, specifically in America and the Fed, for them to probably lower interest rates, anticipating a slowdown in American and global GDP growth. Yeah. So certainly it's a problem.
So we're running out of time, but I wanted you to speak very quickly about the rand. I mean, it was as low as 19 against the US dollar. It's retraced some of its losses. What do you think that's attributable to? And I see that resources have also been doing quite well. Is that all to do with the better than expected GDP number out of China?
Yes, I mean, all of these things are, of course, interrelated. But yeah, the rand last week, it hit and weakened by about 5%. Hitting a low of about 19 Rand 80 or so to the dollar. It then strengthened back again to about 1864 a few days ago, and now it's hovering around the 1891 figure. And I think it's really got two main factors at play. The one is the uncertainty around the globe on the tariffs and what the impact is going to be on global growth and global interest rates. And then, of course, specifically in South Africa, we still have the ongoing uncertainty around the GNU, or the Government of National Unity, around the budget that has been proposed, the proposed VAT increase, and the uncertainty of whether the DA and the ANC are going to manage to make a deal. Yeah. So that uncertainty as well is putting pressure on the rand.
One last thing, and very quickly, gold is looking steaming hot right now. What do? Do we invest in ETFs or do we invest in actual gold stocks? What do we do?
Yes, gold's at an all-time high. I think $2,301. You put it on the screen earlier. And yes, I mean, as we look today, resources are up 4%. The market's up about 1%. And the gold stocks are really rallying. Harmony, Anglo Gold, Sibanye today, all up between 6 to 7%. And you've made really, really good returns over the last 6 months or so from gold stocks. So yes, ETFs is the easy and direct way to get gold exposure. And I think while there is uncertainty in the world and the risk of higher inflation, we know that gold is the place to go and a store of value. And that's where many investors flock. So the momentum is certainly behind the gold price, but I suspect also that much of the good returns has been made in the last 6 months.
Yeah, I suspect you're right as well. Thank you so much, Trevor, for your time and insights. That was Trevor Garvin. He's the head of multi-management at Ned Group Investments. After a short break, Juliet will have more news for you.